are in the world. It's Tuesday. It's just gone 1:15 here in London. Miserable grey London out of the window over there. And we've got US retail sales and the Canadian inflation data in about 15 minutes time at the bottom of the hour. The chart you can see here on the left of me or the right of you, if you're looking at the screen, is the dollar CAD, and here we are, new highs. We're just poking and having a go at 143, or we have this morning. Let's just bring me down a wee bit so the chart's a wee bit bigger. There we are. I don't want to see my ugly mug, do you? So this is rallying. We were last all the way up here at 143 back in April 2020. I can't actually show you this on this. I don't think it goes back far enough, does it, on this monthly chart? No, it only goes back to 23 here, but take it from me, we're at a very sort of strong high here at 143. The daily chart, as you can see, hopefully you can see that just below our little logo there, 143, and pushing to the upside as well. So that continues to hold at highs. I mean, if I bring in the let's bring in the markets panel, move it over a wee bit. There we are. You can see that now, can't we? Yeah, we'll slide that over. No, slide that over too far. There we are. I won't go any further, will it? There we are. So here we are at 143. So today it's been positive. I mean, there's obviously a couple of things driving this. We've got expectations that the line here I've marked on here is the election day here, 5th of November. Obviously, the big cuts that the Canadian central bank have implemented have sort of worked their way through, and we've seen a big move up here. They're talking about the end of their dovish cycleness, or that's how the market's still predicting it, but we've still got a weak Canadian dollar. And obviously, the expectation that the Fed will move on Thursday, and perhaps again a number of times in 2025, but the inflationary impact of Trump's policies as they get implemented. I mean, it's still talking the talk at the moment. Obviously, it's a month or so before he actually gets inaugurated. It's less than that now, isn't it? 20th it is. So that's all in play, and that's why we've got this strong trend. So 141 was breached in the last couple of days as well. That's the other reason I want to show you this chart on the daily time frame. The 20-day moving average is now over 141. A previous resistance area here earlier in the month, and with a key sort of resistance, big round number again. 142 was broken without a bit much of a blink, so we're looking a wee bit overextended on this setup we moved here. If I look at the a different layout for the same chart on the same daily time frame, you can see here the MACDs, the stochastics here, very much in overbought area, but they have been obviously since the sorry, it's the hourly chart. Sorry, I was want to show the daily, just defaulted to the hourly chart. But it has here from like the middle of the month, so it's right at the top of the Bollinger Band here. We're pushing higher. Many saying that that's a reason to start shorting this. Well, this strategy here today, as we get to 143, is suggesting that might be in play. So you can see the last time we had a cross here, and we were to the top of the Bollinger Band here. Remember this strategy. The first trigger is the Bollinger Band touch. So that's that, and then we don't cross. The K and the D line don't cross till this day here, and we were down. But again, although the MACD started to move, we stayed in the top half of the Bollinger Band, so it remained bullish. So the trend outweighed this mean reverting strategy on the daily time frame. See, so we've had a strong trend. We've reverted for a few days, but into the 20-day, that's held. Now we've had a big rally through here again on the 25th. It wasn't enough to turn these MACDs around, but as you can see here, the MACD. The stochastics, we didn't get below we went under 50, but we didn't get into the oversold area down anywhere down near 20. We didn't even get to 30. We flattened out here as the 20-day moving average, the midline, the Bollinger Band held. Then we went up. That was again a first indication that we were getting overbought. But look here, so we've gone from the 6th, 7th, 8th, 9th, 10th, 11th, 12th, and here we are, the 17th. Sorry, I consecutively missed the weekend out. 16th, 17th, and so it's now suggesting we are, we're getting stretched. Can we get to 143? Watch this on an end of day basis if you're using this strategy as a mean reverting, but the trend remains very, very strong. And again, if we look at a different layout to show the strength of the trend, I like the Heikin Ashi candle, so it's very, very clear where the trend is. There we are, Heikin Ashi on the daily time frame here on with the very clean candles, positive, positive, positive. However, one caveat here is that there's still wicks to the south here, so it's a strong move, but the wicks to the south suggests it's perhaps not following through as much as we got to the upside. So watch that for a potential turn is what a few of those other setups are suggesting. If we look at the super trend one, I haven't explained this one, but super trend is a very simple indicator that based on the ATR as well. Again, more on how that works as we move forward. But you can see here, the green light. This is the 50-day moving average as well here on the super trend. So you can see in the last week it's gone even stronger. So it's flattened. So flat levels on the super trend indicator suggest that the trend has cooled, because this is it's looking for it's using the ATR. So anything above this green line is very positive, and obviously anything under the red line here when we're going down is negative, and you want to be looking for shorts. But you can see when the super trend goes horizontal, you want to be careful. It's not trending is what it's saying. Like you see here, it's positive. See here, it's above the green line, so you're taking long trends, long positions, but you want to be careful of trying to, the trend isn't running, and that's what's happened here. You can see here back in the summer, we were sideways, channel bound really, so it wasn't really a trend. We had a rally up and then a move down. See how the trend there was up because we were buyers, but we flattened out before we turned red on the super trend before it moved down. I mean, no indicator is perfect, but it's quite a good one for trending markets. That's why I just use this on this very strong move we've seen in dollar CAD over the last few months. So April 2020, we were last up here at 140, the 143 area. Let's go back to our standard layout. What we're using today, we're using the crossing one, aren't we? Which you marked up, so it remains to the upside. Obviously, we've got both parts of this trade, the dollar and the loonie, the US dollar, the Canadian dollar. 1 week, one stronger, and hence we've got this strong trend. The dollar's very much on the front foot, and obviously with the oil market coming back a tad, that might help the Canadian dollar, but here against the US dollar, it still remains very much moribund. Obviously, the political situation got worse again yesterday in Canada. Remember, we got all these countries that seem to be in some sort of political chaos. We've got the French, the Germans, South Korea, and Canada, with Trudeau very much under pressure. Trump's very strange relationship with Trudeau, extremes of the political sphere, but their neighbours, obviously geographically, politically, they're poles apart, the pair of them. But yeah, Trudeau, particularly unpopular government at the moment, lost a key ally yesterday in the finance area, and so that doesn't help confidence and sentiment. Remember the other two things that drive the situation. So dollar CAD remains to the upside. Anyway, enough of the background. The actual data today that's due. You can see here on the calendar. I'll come back to what's happened in Europe this morning in a wee bit, but we are expecting core retail sales from Canada Tuesday. Yep, today. There we are. The core number here, 0.4 of 1%, so tick up again on a monthly basis. Headline, 0.6 of 1%. Not that perhaps the market moving event it used to be retail sales, but it's again, remember, the home of the consumer, the home of the global consumer, has perhaps shifted a bit to Asia now, but obviously US is still obviously the key market for consumer goods. So retail sales important. We have inflation. Central banks are now talking about disinflationary situations. We've had these two strong hikes from the Bank of Canada possibly we're reducing to 25 basis points the cuts now. Sorry, hikes, cuts. And so we'll see how that pans out. But again, it's the services sector, as we saw with the PMIs yesterday, remains very robust, and the manufacturing sectors remain very much moribund. So data is about to drop in the next 30 seconds or so. So we'll see how that comes out and see how we react with our dollar CAD position. So let's just take this down to the the 5-minute chart, see where we are. So here, short term, we've sort of topped out. We topped out this morning here at an hour or so ago, or half an hour ago here, and shy of that 150, 43. I know it's surprising we gapped low, so we're expecting the data to. I'll have to refresh this. You can see that my calendar's gone a bit squiffy for some reason. Oh, let me just. I won't keep my changes, unfortunately. There we are. So what we got? So core retail sales are weaker in the US. The headline is stronger than expected. The headline number 0.7 of 1% compared to 0.5 of 1% last month. That's been revised higher, so it's better than the expectations. The numbers from last month were better, so it's the headline is better. Some of the detail is a bit weaker, interestingly, but probably more important as far as the move we've just seen in dollar CAD is the inflation cooling in Canada again. So this disinflation story that we've been saying about the from the central banks is starting to come around. So we're under 2% here. That'll be the thing that grabs the headlines. Core CPI is turned negative here, interesting as well. 1.6% year on year. Now, and the trimmed numbers, let's have a look at the trim because they give it an average. So median CPI is coming at 2.6%, trimmed is coming up 2.7%. That's actually hotter than expected, but the common number is coming cheaper than expected, lower than expected at 2.21% from 2.2%. So that brings it actually ticks the average up, doesn't it? So the average will now sit at a bit over 2.6%. So that compared with the retail sales numbers out of the US explains the initial move down here for dollar CAD here. But those retail sales numbers a bit weaker than expected. The core is 0.2 compared to 0.4 of 1% on the retail sales numbers for the US. So as you can see, really the small. Let's just go this to the just for this particular chart. We've got the 10-minute chart. We see all where we've been today. So it's been a strong day so far. Already for dollar CAD, and we've come into this sort of support area that we've been testing since the European Open. So this low here, you could perhaps expect to hold if we continue. This low here, which marks this sort of 50 period moving average here on the 10-minute chart, you'd hope that you'd like to see that holding. However, you can see we've got a here for 10-minute traders. Trend line here. We got this rising top here, which is positive, but sorry. So we have a wedge forming here on the 10-minute chart. Just a horizontal ray now. Remember, it's there, and so that's an area. If this level breaks and it marks the 50 period, there's a lot of fresh air here. So if that breaks, your next downside target will be 142.70, which we haven't yet tested here. And then so that 142.70 zone is the next level to the downside to test, and then we take to 142.65, another 5 pips lower. So there are 2 levels to the downside if this break continues, and then the next level would take us through here to 142.60. So that's could be a key target area on these 10-minute charts for dollar CAD today. See those areas. So there's a bit of sort of minor support through here at 42.70, and then 42.60 is the big support area. If this breaks here, we'd obviously 10 minutes we need to wait for the candles to complete. But interesting data dump that we got if we go back to the 5 minute, we've got quite a significant move on the data. So immediately dollars cooled on the retail sales data more than anything. So again, see the similar move down to 5 minute, only the areas a wee bit closer. It's sort of again similar. Actually, it's very, very similar to the 10 minute chart, but that minor resistance at 142.70 through here. So it's just, you know, volumes are relatively normal. But yeah, the retail sales are still holding up 0.7 to 1% month on month to the upside. So we've come back to that. See how that's the dollars and the CAD are reacting. They've both had those bits of data conflicting pieces there. This morning, the first information this morning, the first data this morning was the go back to the 15-minute chart. Today was sterling here this morning. 7 o'clock we had sorry, just bringing the calendar back. We had oh, this calendar does my head in. Tuesday, there we are. Earnings hotter, much hotter than expected. In fact, much hotter than expected. No, employment change was better than expected as well. So earnings came in at 5.2% from 4.4% the previous month. We had an upgrade to here, this headline one here, including the bonuses, from 4.3%. So again, the disinflationary numbers that Andrew Bailey's talking about in the UK, this will feed through to countering that argument. So again, it will add to this idea that, you know, particularly services inflation in the UK, because these earnings, these average earnings, tend to be skewed to the higher end as well. Big drop in claimants. That's a big tick the politicians have tried to make hay out of this morning. And so, but that's kind of right by this employment change as well. So sterling, as we saw, reacted positively on the initial data dump, and then we gave most of it back, but then we've moved positively on for the rest of the day. So we're sort of pushing higher. We are over the key 127 area for cable. Marked on. Why have I got 127 marked on? Or is it? Oh, that's why I marked it in pink, not yellow. So here on the hourly chart, we're up overall for the day, but not marginally. And so we were down into the data. It was better than expected, and we've lifted sterling so far. So 127. We're just anchoring, eking over 127 to the upside today for cable. Euro saw IFO sort of the let's go back to calendar. The let's see, German got 9 o'clock German date here. It was up there. IFO came in at 84.7. This one for December, the climate index, and then the ZEW sentiment was much better than expected as well. But again, this is a sentiment indicator. Given some of the PMI data we saw earlier in the week, this is a bit of a surprise. So that's lifted expectations around the euro as well. So we're back to the so this is the where were we? That's our 9 o'clock candle. That's our 9 o'clock candle. We bottomed out basically, and we've recovered since data. So we're back to the area we've been talking about for a long time. Key buys at 105 for the euro, but the trend remains very much, as we saw yesterday on our daily time, very much to the downside, and it's just another day in December, if you like. We had a positive day yesterday. We're currently down for the day, but that's September, that December low 105 a 104.50 area. It's only 50 pips away again, and we remain sort of pivoting through the 105 area, which might be the case into the end of the year as we move forward now. So we might see some new interest in the new, or even in next week, but on lower volumes. So just be careful of that. But the trend, having pitched below 104 at the beginning of the end of November, has come back a tad. And so we need to, as I said yesterday, we need to break away significantly from the 105 area and then push through 106 if the euro is going to come back against the dollar. With as we get into January and Trump being inaugurated and all this chatter, all this pre-election manifesto stuff all becomes policy or doesn't become policy. How far he goes with the tariffs, how aggressive they are with the tariffs, how much savings they can actually make in the Department of Government Efficiency, the Doge, as time rolls out in 2025, we'll all see. And obviously the impact has the bottom been reached now with both economically and politically in Germany and France, or is it still very unstable and hence benefiting the US economy, US dollar? So all of that very much in the mix for 2025. But as far as the euro is concerned, the trend remains to the downside. The 20-day moving average is now at 105.43, so it's coming down all the time. It's easier to get to break it. The 50 still trending low, 106.72, so that's very much still set. So expect it, over the next week or so, meander around this 105. Unless we test the new low, try and push a new December low in the next week or so. So euro remains on the back foot. As far as today's concerned, we're up a tad and come back on that data that's just come out now. So we went to the 20-hour moving average and been short here from whenever that was, 4 o'clock. That would have triggered short. It's turned around. It depends where your stop loss is pulled down to, but you're doing stopped out for a gain of from about here to here on that particular strategy this morning. But this might be indicating another short in 20 minutes, or another to re-add to your short, having rejected the 20-day moving average. Sorry, the 20-hour moving average. You see, so it's retraced, but we've moved lower and we're back under those 3 key moving averages. So that would be a continuation trade potentially on conclusion, or in re-entry, I should say, on the conclusion of that candle, if you're being quite aggressive on short in the euro on the 1 hour time frame using this particular strategy. Elsewhere today, there wasn't any major news out of Australia this morning. So the Aussie continues its decline to the dollar. This morning we went back to the test, this 63.35 low. If we go up to the daily time frame, so the Australian dollar remains very much on the back foot, and we have pushed this December low here, which we talked about yesterday, again today. So that's the major news out of the Aussie for the Aussie traders this morning. There's that 63. So why is it marked on with that color? But anyway, 63.35 area was tested this morning, and the trend remains to the downside. So the 1 hour, the 4 hour, the daily all remain negative. So be careful trying to buy Aussie, trying to catch the bottom for the Aussie. CAD we talked about earlier, obviously 142.75 now. Dollar yen is attacking the next key zone, which is the 154 area. Is this yellow line here? We were down a bit this morning. It looked like it was going to go short. That's been closed out there. So that was a short there. That's closed out there on this strategy, having been sort of ambling long most of the last week or so. And we topped out at 143, 145.50, as we said yesterday. The short was finally triggered. So not until this morning, but that's been taken back it's been closed quite quickly as it's turned around here back over the 9 period moving average. I mean, you could have had this stop loss up here a wee bit, so you might still be, if this candle doesn't manage to break. So we'll see how that pans out as well. And again, depending on how you were trading, that is either still short if you're using the stop loss, which should have been around about it, sort of round about there. There's lots of 154.20 on this particular candle here this morning. Or if you're using the retrace back to the moving averages when it's back over the, actually it hasn't actually closed over the mid one, it's the low one, isn't it? So that is actually still short, that one, even if you're using this 9 period, the mid moving average is your indicator. But as far as the ATR is concerned, that was looking for about 0.30 from here. So we got to 53.85. So we were looking for about down to here, about 55 on the hourly time frame. So that is still actually short at the moment. I said it's seen when it closes. Currently, it looks like it's turning around there for dollar yen. But anyway, as far as the higher time frame concerned, the trend. Whoops. The trend is still bouncing back. The dollar's bounced back the last 10 days or so. We got through this key fib level of the last leg down, didn't we? That's the fib level we got through to yesterday, and we're over it. So that's key to hold today. 153.57 is that daily 0.68 fib retracement of the last leg down. So we're back over that and holding that. So hold of that remains positive at the higher time frame. So that against the trend hourly trade is against the trend. So that might not play out. And we did close yesterday. If I can zoom this up a bit, we can see yesterday we did actually close above 154. Yesterday 154.10 is where we closed. So very weak break of 154, but we did close above it yesterday. So it's still bid, and the moving average is still aligned. So the daily is still aligned. So that short that triggered on the hourly here, bearing in mind that's against the higher time frame trend, so you would have reduced the risk on that because it's against the higher time frame trend. Again, if you want some more details on how to size these and how to take these positions, do let me know, and I will do some more videos on sizing and position sizing, in particular when you're with the trend or when you're against the trend. So obviously when you're with the trend, you want to be adding to your position on big candles that you can see here, and in the hourly time it went against you obviously and took you out, so that would have been a loser, but that happens. But then new high here, happy to buy that one, whenever that was, 16th at 12, the system would have bought that, and maybe have bought again, but we'll see. That's the trend is still up, so we're consolidating into yesterday and a bit today. So although the data's on your side. So dollar yen overall remains positive. The Kiwi very similar to the Australian and the Canadian, very much under pressure, the commodity currencies. 57.57 is where we trade currently. You can see this low from earlier in the week as well. So again, another one that's biased, very much biased to the downside. The 4-hour chart has its 20 period moving average at 57.77. We are pushing to new lows again here. See the 4 hours, so we bounced down, but big move down, retrace, big move down, minor retrace, big move. Well, we don't know yet, do we? How are we going down here? I suppose that's suggesting we might find some support, but we'd said that there, didn't we? At 58, bit of support at 58, but went lower, then we retraced, but then we've gone lower again since. So the lows are still getting lower here, as you can see, and the highs are getting lower. So the trend remains very much fixed. 57.76 is where the 20 period 4-hour moving average sits. The 50 is even higher. It's above the dot 58. So it's all about process, guys. It doesn't matter what the asset is. It doesn't matter what the numbers I'm talking about is. It's all relative to the thing that you're trading. That's why I like the ATR, the average true range of the asset that you're looking at on the particular time frame that you're looking at. And currently, it's declining. It's not necessarily in line with the trend. It's just the variation, the variable is declining. So that might be cooling down, but we've been cooling, ever since we were all the way up here. So don't take that as a trend. That's just how much the asset is moving, and its volatility is reducing. So it may be perhaps coming to an end. But who knows? It's not it's certainly not saying that at the moment. So stay on that trend. That's on that 4 hour. That's still short. The 1 hour, yeah, still similar short positions, but there you can see a bit more of a resistance here on the 1 hours this week. But that's all it is, isn't it? But again, you can see the highs are getting lower, the lows, interestingly, are sort of clustering around here. So yeah, 57.50 maybe is getting bought. The recent low has taken us to 57.50 itself. So at the moment this week there's buys at 57.50 for Kiwi. Euro pound we did. Let's just go back to the CAD, see where we are. 42.75. So there's not much change since we were last looking. We go back to the 10-minute. We were looking for a break, weren't we? It's didn't happen. There's the data. There's the second candle. Lots of volatility. It's still negative. So it's but 50 is held. So tentative short still, but see if we'd like to break away from this level. So back to 42.70 and then 42.60. 142.60 is a bigger support area for this pair. But remember, again, another one that you're going against the trend on these shorter time frames based on that data that's just come. We've had US retail sales. Let me just recap if you just joined us. US retail sales for some reason is above. A bit of a mixed picture, but the headline is the one that's grabbed the attention. Better than expected, 0.7 of 1% for the headline. The one with the three bulls, the core flipped the other way, and it was worse than expected. Although both previous months have been upgraded. So the core at 0.2 of 1%, the headline 0.7 of 1%, compared to 0.6, 0.4 of 1%, depending on the calendar you're using. And the CAD inflation, the monthly has come in flat. The median's come in at 2.6 on a year-on-year basis. The trimmed is coming at 2.7. So both of them hotter than expected. And the common number, which is less significant, is coming at 0.2 of 1%. That's gone down from 2.2%. So there's a bit of a tick up in inflation there. So flying in the face of others, this disinflationary story. It could be that there's aggressive cuts that the Bank of Canada have placed or have perhaps cooling, but it's only obviously one number. But the trend continues to be sort of ticking up from the summer lows we've had in all these major economies as far as the inflation numbers are concerned. Okay, so here, yeah, so we've bang it. So we're buying this support line here at the moment for dollar CAD on these 10-minute time frames. So playing it both ways, although this is still short on the long, obviously on the higher time frames. We've got the hourly time frame. So this is still long. Obviously, this hourly candle will close in 10 minutes, but as you can see, it's depends how it closes, but it's engulfed by the previous positive hour. See how that candle, the body of the 12 o'clock candle, the top of it and the bottom of it at the moment is or the current candle is within the previous candle. However, we're also looking at potential tweeze the top here with this down. If in the next 5 minutes I saw this bottom here that we close below this will be negative. We close below this 142.76, that short-term 10-minute, 15-minute support we've had that we marked on our chart, previous chart, and the mid the 9 period moving average, that would be negative. Certainly, and we could be looking to perhaps starting to move down. But at the moment, your hourly trader is still long. He's holding his nerve because that's the major day. I mean, you might have got out during this hour as well, ahead of the date. I mean, that's what I tend to do. They were affected. The data that came out half an hour ago was affecting both currencies. So you might have taken your profit here at the first negative candle of the day. You might have said, "Oh, look at these peaks." They might go again. Whether you'd held right up to the actual data coming. Let me just show you the shorter time frame, the 15-minute time frame. So you can see here. So this was this morning, European opening, or the European opening trades were down here, but we spiked and then went side to side. So you people closing out their longs from in the Asian session through here, perhaps. But as you can see, the data has come right on here. It's moved us down to this support area, as we said initially, through that low, and obviously it's been bought. It was bought here at quarter to 10. It was bought at 10 o'clock. It was bought again at quarter past and at 11:30. It was bought again at 12 and at 12:15, and the data's we've moved up again just before the data came out, and then the data's come out at 1:30 here as we move down. But you know, it's been bought again at this 142.75 area. So it's looking okay at the moment, but it may. So the 15-minute trader is still in that. The 1 hour trader is still in that. The 4 hour trader is certainly still in the trade. When's this? But that's suggesting we may be looking at running out of steam. That concludes as well in 5 minutes. That 4 hour candle started at 10 o'clock. We'll finish at 2 o'clock, 1400 hours. So as you can see, practically run out of steam. We didn't get to 1 foot, but it's still positive. You know, again, the support the sort of bigger stop losses here at 142.50. You might have brought it up to that support level we'd marked on a shorter time frame if you've been a bit more aggressive. Sorry, that wasn't the one we're talking about. No, that's 142.60. That next level we put as a target to the downside. Interesting, might be where the 4 hour stops sitting currently if you've sort of moved it up. Personally, I would have probably left it around that channel's been broken. So yeah, I'd probably it's a bit close. It's only like one candle behind. I'd probably still be somewhere like that if I was trailing my 4 hour stop, or if I was trading this on that time frame, which I'm not at the moment. So we are long on daily time frame for dollar CAD here based on that. And stop loss is round about there now. I think if I remember right, it's below the 9-period moving average, 141.75. I think it was. Maybe I'll have to check the system itself. But yeah, that's long, and it's sat there, and it's staying there. The last entry or addition was here on the 12th on the size, based on the size of the candle following these two monsters here. That was a bit twitchy when it declined for 4 days, but yeah, we were back over 141 again, looking like that was the top, didn't it? 141 point. But there we go. Anyway, dollar CAD very much in focus today, and I've been prattling on for an hour, and I've only looked at the forex markets. Nobody's asking me for anything else. So let's have a look at indices. Indices yesterday, we had all-time highs for the Nasdaq 100. It's up 33% on the Nasdaq 100. I was looking back this morning. So it's had a fantastic. I should show you the weekly chart for the Nasdaq 100 for 2024. So we're all the way. We were down here as we started the year. This time last year, where we were this week, we were at and we went down in January. Interesting. We were at 16,800. And here we are at over 22,300. So it's been a very strong run. Obviously, we cooled a bit at the end of the summer on lower volumes, as the expectation of interest rates were cooling a bit. But certainly the 19,500 level here proved key, and we've rallied strongly through September, October. Obviously, the lift of the Trump administration. The second Trump administration coming here is that big weekly candle there, retraced for a week and then broke to new highs here at the beginning of December. So we continue to rattle high, and the December Christmas rally is in full flow. There's a week and a bit to go, 17th. So that's looking fairly positive as well. So again, careful trying to catch the top on this. Have your system, trade your system, and again, another one. The stop loss round about up here on a daily basis. That was a big candle again, be around here somewhere. But the 20-day, the key big catastrophic loss, as you might call it, 21,400 now, or 21,349. So Nasdaq's very well bid. The S&P 500, 6,075. We closed last night, or 74, up 23 points yesterday. We're down currently today, consolidating at highs. What we're doing here, my friends. Don't panic just yet. This rally still looks like you might have some steam. The AI story continues to rattle on. Broadcom were up another 12% yesterday. I've rallied 24% the day before. Tesla was up to a new all-time high yesterday as well, 6% up yesterday. Amazon was up 2%, and Google up another 3.3%. Google's had a really good run. Amazon and Google very much in focus. So the Magnificent Seven tech stocks. So stocks still look fairly robust. The Fed outlook for 2025 is sort of cooling somewhat, given the potential inflationary aspects coming from the Trump, as I said earlier, Trump administration. But see what happens really, and just react to the charts. Don't get too pulled in with the news, and stay on the surfboard as that trend is still set. Gets a bit. Many are arguing now it's got a bit overextended, but they've been saying that all year. We have seen some pullbacks, some drawdowns, but we continue to move higher. DAX this morning, I showed this on our Discord levels here. Big rally through 20,000 last week, 20,500 we went to on Friday. We were down yesterday, and we were bouncing around today. I'll show you the hourly chart. I think I put on Discord. So this is our short day yesterday. Retrace took us out here, but then re-entered on that candle there. Took us down to the bottom. Took us out there as it retraced back through the 9. Went long here, and then turned around straight away on that. So we're now back short, continuing the short trade of the trend from yesterday. So we've had a really good bounce from 2,300. We've been back to test it again since I put that spot up. So there's clearly some support at 2,300, but the market doesn't want to take it any higher today. So 20,330 is where we trade at the moment on the DAX. So possible similar sort of setup yesterday. So that long which triggered here with a stop loss around about here. Wouldn't have had it 2,300. I might because that was the term, but it was very much against the trend, wasn't it, today? But yeah, that would have stopped us out. But then we've re-entered short here, so we'll see if we can go low. But 2,300 looks like it may hold as well. Remember, we are again, small positions because it's very much against the trend. If we look at the 4, you can see this 2,300 here, or here, or here. Look at the 4-hour time frame. Bought all the way back here in the beginning of the month, 9th and the 10th of December. It's a bit of a resistance area on the way up, but not a significant one. But consolidating, how it's stretched out, might have, it was still in a bit of a consolidation area here for this first half of December. Will we be giving back any of our big gains? We'll see. Doesn't really look like it, to be honest. The 20-day is all the way back here at 20,000 itself, so there's still 300 points to give up. But the more this consolidates here, so we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 now days around the 23,300 level, so that remains relatively strong. And as you can see, that this our midline, the 9-period moving average, hasn't been breached following the big leg, significant rally up we had here at the beginning of December. So 2,300 is it very much 20,300 is in play there. Sorry, not 2,300. Okay, so DAX remains bid to the upside. Anybody else? Anything else? Any other charts? Anybody want to have a look at? That's the same. So, no. Let's have a look at Billy Bitcoin, which went to another. We'll come back to gold. Bitcoin. I'll come back to gold to finish off our dollar CAD session. So 107. 375, so new all-time highs again. That was from early trades on Monday. Yesterday we poked to 107.85, and we're up again today. So again, another one that just keeps trucking. Again, it's comments from Trump about regulation and crypto friendly. He'd met with who'd been down to see him down at Mar-a-Lago. I made a note of that, didn't I? Can't remember who it was now. But yeah, I mean, there's an argument that a lot of the, geopolitical uncertainty, the countries like I was rattled off before about, from South Korea to obviously the continuing unrest and disruptions in the Middle East, to Germany, to France, continue to benefit the US, because that's the safe. It's not. We were worried about, weren't we, about the split. It's very, very close election, and what would happen if there was political uncertainty, the end of democracy, all that sort of chatter was spinning around, wasn't it? It was quite a clear, decisive victory for President Trump, President-elect Trump. Love him or hate him, politically, it's quite sound, wasn't it? So all that has gone away. Yeah, that's perhaps fed to the stock markets and the dollar, but also perhaps the crypto rallies we're seeing, as well as this crypto-friendly tone this sort of right-wing Republican president is going to bring back to the White House. So anyway, it's 107,600 to be buy if you want to buy this at the moment. So new all-time highs again today, third consecutive day for Bitcoin. So, and that's obviously filtering out to other cryptos as well, Ethereum in particular. Anyway, and finally, gold's done the opposite. We've turned around to the downside. 2640 has been breached this morning. So the big down candle we had on Friday, we had an update yesterday, but we're down again today into this congestion zone that we'd been in following the big shakeout on the 25th. It looked like that would all been bought back, but it didn't want to go any higher. It didn't want to hold 2,700, and we came down quite aggressively Thursday, Friday, and we're down again today. So today, I know a lot of you trade this on an intraday basis. The trend remains to the downside. We breached the 20 period briefly in the European Open, but we continue to track lower. Hour up and hour down, but the trend remains to the downside. The moving averages are moving lower. We couldn't break the 20 period here on Friday. We moved lower and into this low. We've pitched it, and then my next line here sits at 26.32. So that's our next downside target for gold today. And that comes from this area here. You see the 26. Was this support area through here back late last week. So up and down. I hate peaky charts like that, but it doesn't matter. You stay the right side. You don't have an opinion. Don't try and keep your emotions out. Obviously, you'd prefer it to go up if you're long. You'd prefer it to go down if you're short, because that's where you're making money. But do what the charts are telling you. If you're a technical trader, if you're a fundamental trader, buying for different reasons, trading on sentiment, try and mix it all together and have a system that works for you. So 26.35 is where 26.37 is where we trade now. 26.32 is the next downside target today for gold, I would argue. On that trend analysis, we need to then breach 26.45 if we're going to go higher, and then my 20-hour sits just above that at 26.47, and the 50-hour sits at 26.52. So 26.50 comes into play, as you might expect. There's that key area. So but drifting low on a stronger dollar. Also, there's more chatter that the Israelis are more up for a potential ceasefire as well in the Middle East as well. So some of these a staged ceasefire, but we've been here before, haven't we? And it hasn't happened. So anyway, I've rattled on for too long this morning. I'll see you tomorrow. Tomorrow is obviously the Fed announcement. Later on in the day, that's really what markets are looking toward. So in summary, the US retail sales figures were a bit mixed, but bias really to the headline is this 0.7 of 1% from 0.4 of 1% was expected, and the stickiness of inflation hasn't come through on the Canadian data. It's all sort of drifted a tad lower. So tomorrow, really, it's UK inflation to kick off the European session. European inflation an hour or two later, and then the Fed announcement at much later in the afternoon. Where's he gone? There we are. At sort of 7 o'clock GMT. 25 basis points will probably 99% chance happen now. It was 97% yesterday, wasn't it? It's probably cooled a wee bit from that, but as nailed on as possible. It's what Powell says about the outlook for 2025 is what really markets are looking at now, not really what happens tomorrow. It's really perhaps how much of the statement has been tweaked and what actually he says at the press conference after he's read the statement, and he's cross-examined by the journalist. So watch that in particular. So volatility as the data comes out at 7 o'clock, and then volatility for the hour thereafter, or 45 minutes thereafter, as Powell talks to the press. But we'll see all that tomorrow. So I'll leave you with gold to the downside. Dollar CAD remains, I'm pretty sure it remains bid 142.73, so we're a tad lower than we were, but we're still holding that. If we go back to our 10-minute setup, we're still really holding our channel we formed. So we've breached that. So that initial short is sort of starting to play out a wee bit now, but well, just go with the flow basically, guys. So that was our first. That was as the data came out. Looked like the 50 might hold, but we're it's breached that for 1, 2 kind of may come back into there, but still a bit short on that. Keep the stop loss tight. The hourly chart is still long. There we go. That's out of that long run there. It's closed. So that would have definitely closed out the long run. But we now might now come back. But you can see that's I was saying, it was literally like 10 minutes before it broke, wasn't it? But so that's a big negative candle now. We've seen it was engulfing its close, so it's closed low. So there's been more selling, more closing of these positions that have been long all day, presumably. So a lot of people have been out of that run, as we would have been on this hourly time frame, and now sitting waiting for the next cross of the moving averages. They still remained aligned, so this might be dipping, and if we close a bit higher, we might test 143. Who knows? But at the moment, that's out of that. The daily still remains long, and there you go. See, so today's still a green candle, still up for the day. Of all that noise, it's still an up day for dollar CAD. I've rolled over in the short term. So end of day trade will come in and just look at his charts tonight and see if that's still a green candle. That's okay. If it goes red one, well, that's probably okay as well, because my stop loss is down here somewhere. So dollar CAD remains bid. Short term traders have had their say on the data. So take care, everyone. We'll see you all tomorrow, and trade carefully as ever. All the best. Bye bye.